There are further signs of a dramatic cooling in the real estate market, with preliminary auction results at the lowest level since 2022. ABC Business Daily host Carrington Clarke joins me now live. Carrington, what does this past weekend's activity tell us about the state of confidence in the economy right now?
Yeah, we've seen a dramatic shift in the property market over the past few weeks. It was very much a seller's market, and the expectation was that we were going to see very strong property price growth this year. But the war in the Middle East has completely shifted the dial, it appears. So it's traditionally a major week for auctions, the weekend before the Easter long weekend, and this year was no different. So we saw an increase of nearly 50% of the properties up for auction from the week before, and up 40% from the same week last year. But the preliminary auction clearance rate, so this is the percentage of auctions that were successful, where the buyer met the price that the seller wanted, was only 60.9%. Now that number will continue to fall once the full results come in, and that compared to the week before, where we saw a 62.7% preliminary auction clearance rate, and it fell to 56.9%. So what I'm hearing from real estate agents is that vendors, sellers just now have an unrealistic expectation about what they can sell their property for. What they want is what they would have probably got a couple of months ago, but now buyers are just not there for those prices. And it is always more difficult to see what's happening in the property market compared to, say, the stock market, where we have daily ferocious buying and selling to work out what the price is. But there's no doubt that we have seen downward pressure on property prices. People are concerned about the 2 interest rate rises that we've already seen, and potentially more to come. The expectation is that we will see at least 1 more interest rate rise from the Reserve Bank. UBS, though, out today suggesting they think there will be 2 further interest rate rises this year. And of course, people are dealing with higher costs, including when they go to fill up a tank of petrol, but also that's feeding through to other inflationary pressures, and also just a general fear about what's happening with the global economy, what the outlook is. Are people going to be able to keep their jobs if we do start to see some of those most catastrophic potential forecasts of what could go wrong if this war is prolonged? So at the moment, a disconnect between what sellers think they should be getting for their property and what buyers want. Now, this is obviously good news for those people who are trying to get into the property market, but it is just something to keep an eye on, and particularly for the government. It had been floated potentially by some analysts that we could, and political scientists, that we could be seeing the government look at changing the capital gains discount. Whether or not the government wants to do that in this environment remains to be seen. But a lot of factors at play in this property market, but no doubt that it has really flipped in the last few weeks.
And just briefly, Carrington, what are we expecting on the stock market today?
Well, so we are expecting the Australian market to fall today, down, say, 0.7, 0.8%. It's about half what we saw in the US fall at the end of last week in Wall Street. The Australian market now has fallen about 8% since its recent highs. People are obviously still concerned about the high price of energy, and they're concerned about how long this war could continue for.
ABC Business Daily host Carrington Clarke, thank you.